Back to QAV America, Tony. Episode 27.
Wow, that's gone fast.
It's been a couple of weeks since we did a US show. Didn't have time to do one last week, but I'll just start with a bit of a portfolio update, get into some news, and then I'm going to do a special deep dive pulled pork that I prepared just for you,
Thank you.
Tony. Went way down the list to
I
find this one for you.
look forward to it.
The portfolio has not had a good 30 days. Our US portfolio, it's down 6% in the last 30 days versus the S&P 500, which is pretty much neutral in the last 30 days. So it hasn't been doing great too. Hold on. Did I say how long? It's down. Let me see. What? No, down 2.5%, not 6%, 2.5% in the last 30 days. So it's hasn't been a great period for us still. Tariffs, I think that just the general US economy is not boding well for our portfolio over there. But that said, again, if you look at since inception, which is just a little bit over 2 years, September 23, we're tracking at 53% return versus the S&P 500 51%. So we're still beating the index over the last couple of years. But year to date, we're down 18% versus the S&P 500 up 14%. So it has been a rough calendar year for our portfolio for all the reasons I mentioned before. But some of the stocks are still, everything's doing quite well. Everything's up, everything's doing well, just not as well as it was doing.
Came off its peak.
Nothing to complain. Yeah,
Yes.
yeah, like me.
Best days are ahead if you can.
I keep telling myself that, Tony. Listen, been interesting a couple of weeks in the US market. Corporate earnings are surprisingly strong. For the third quarter of 2025, median earnings for the Russell 3000 index rose about 11% compared to a year ago. 6 of the 11 sectors in the S&P 500 reported positive earnings growth, up from just 2 sectors in the prior quarter. Big tech, industrial, energy have been leading. Consumer-facing firms, however, showing more signs of strain, according to the Financial Times. Investment in AI and data centers, though, as we know, is the big driver over there. Microsoft, Alphabet, Meta are projecting total capital expenditures in 2025 of around US $370 billion for data center and infrastructure. And I was reading an analysis of this in Wired magazine. They were saying they're funding it all from cash to these companies because they're sitting on Buffett levels of cash. According to one estimate,
aren't they just passing it around to each other?
Well, in some cases, yeah. Nvidia's just handing it out and getting it back. According to one estimate, nearly all of US GDP growth in H1 2025 was accounted for by investment in data centers and software processing tech.
Wow.
Since ChatGPT launched in November 2022, 3 years ago, AI-related stocks have accounted for 75% of S&P 500 returns and 80% of earnings growth, according to JP Morgan. So that's absolutely insane, considering, that's half a dozen stocks.
Yes.
And OpenAI isn't even listed.
Yeah.
But, as we say each episode, we're finding tons of value opportunities, and there's no trouble finding good quality companies that are generating cash that you can buy very, very cheap. Looking at, price to operating cash flow, looking at their book price, which includes the one I'm going to talk about today. Not that there aren't challenges, but, plenty of stuff to buy.
Well, as we were just speaking about, if a lot of money's going into the AI sector, the tech sector, there's not many bids going into your run-of-the-mill industrial company, and that's, I think, creating value within the rest of the market. And more in the US, Australia doesn't really have an AI sector, but certainly if the hot sector is taking inflows away from the general market, so the general market must be undervalued.
There's this huge sucking sound.
Yeah.
as all the money gets pulled into this one zone, and yeah, it means
Into
that everything
five
else is
pockets.
cheap.
The 5 pockets.
The 5 pockets, yeah. Back to the US economy, what is showing cracks is the labour market, and broader participation is weakening. In October, one private sector data tracker reported 9,100 jobs lost, and planned layoffs surged to 153,000. Now, I just mentioned on our Australian show, I read some quotes from Jerome Powell in the last week or two where he was saying what they are seeing is a lot of companies saying they're not planning on hiring people because they expect AI to be able to do those jobs, particularly people coming out of university. It's being referred to as the great freeze by some economists over there. There's a freeze on job hiring. We're seeing it happening here as well, predominantly in the tech sector, but other professions as well, with these junior level clerical, where I got my first job was, bank clerical stuff. When I was 17, 18, a lot of those jobs are going to just be replaced now by AI. Companies are expecting they will be able to replace them with an AI tool.
And that's an important point you make there, the expectation, because I've seen similar parallels to this happen in the past where it's almost de rigueur. You've got to say we're freezing hiring. If you're not saying we're freezing hiring, then analysts are on you, like bees to a honeypot. Why aren't you freezing hiring? Everyone else is freezing hiring. So they freeze hiring. And then, a couple of quarters time, they start hiring again because it didn't really apply to them. So it'll be interesting to see. I'm not saying that companies won't need as many staff because of the impacts of AI, but it's almost becoming clearer to me now that at least at this stage, I know there's a lot more to come and a lot more upgrades to be released, but at this stage, it's almost like what we're seeing is an increase in the power of computing that's brought about by AI. So we were talking before about being able to target ads better. There's nothing revolutionary in the concept of targeting ads, but if it's done cheaper and faster, then yeah, people will lose their jobs in marketing departments or whatever. So I get that. Whether it'll be interesting to watch. If it is a great freeze and suddenly we have people not going to universities, that'll be a big impact on society, I think. But let's just watch the space and see what happens.
Yeah, why are you going to spend, in Australia, 20, 30 grand to get a university degree, in the US, hundreds of thousands of dollars to get a university degree, if there's very high chance that there won't be a job for you at the end of it? So then what do those people do? What do they go and do instead of going to university?
Well, I think it's possibly different in the US, but in Australia, there's definitely been a trend towards trades and a trend towards working in sectors like the mining industry. It might be different in the US, but yeah, I think it's quite legitimate now for someone leaving school to say, well, I can go and make as much money if I get a trade and become a qualified plumber, electrician, contractor, builder, whatever, as opposed to spending 3+ years at university getting a degree and then going into an entry-level job. So that's been happening for a while.
The next 3 to 5 years, humanoid robots are going to hit the market, all with superpowered AI brains, and a lot of those jobs aren't going to be there either. Elon just got his $1 trillion pay package approved, and part of that is...
He's taken that bet that it's going to happen.
Well, part of that is he has to ship 1 million Optimus robots in the next 10 years. Now, 1 million doesn't sound like a lot, but I predict that there will be 5,000 humanoid robot companies coming out of China in the next 5 to 10 years that will all be shipping 1 million robots or more. So,
well, I also predict too, if Elon gets $1 trillion from shipping 1 million robots, they're going to be like R2-D2. They're going to have Kenny Baker in the inside, actually working the levers.
Did you see, there was a video doing rounds in the last few days. There was a Chinese car manufacturer called Xpeng, I think, that demoed their new humanoid robot called Iron, I-R-O-N, and it had breasts and a booty, and it was walking on the stage like a model, like a supermodel on a walkway, and people didn't believe it didn't have a human in it, so they actually cut it open on live on stage and showed you that there was no human in there just to prove they weren't pulling an Elon. Yeah. But so the top Fed officials, John Williams, who's the head of the New York Fed, warned this week that rising inequality and affordability crises for lower middle income households pose a real risk to the economy. He flagged the balancing act the Federal Reserve faces between inflation, jobs, and growth. It's a crazy situation over there at the moment. Some things are booming. Some people are doing very well, but generally speaking, a lot of people are struggling. And now, of course, their food stamps have been cut off. With the budget shut down, flights are being cancelled, all sorts of problems over there. The stock market's starting to look a bit fatigued. The NASDAQ had its worst week this week since April. Tariffs remain a factor. According to Bank of America Global Research, tariffs might be adding 30 to 50 basis points to core inflation via higher consumer costs and could continue to put upward pressure on inflation. And the Fed signaled that rate cuts are not a done deal at the next meeting. Some Fed members are reluctant, given inflation remains above target and data is patchy thanks to the government shutdown affecting many metrics. They're not exactly sure what the numbers look like moving forwards. So,
and they complain about China's stats.
yes. So look, it's a mixed bag over in the US, and as you know, the company I'm going to talk about today, the one I handpicked for you, suffering a little bit as a result of the uncertainty, particularly with tariffs in the US. This company is the ticker is MODG. The company is currently called, but not for much longer, Topgolf Callaway Brands Corp. You want to guess how they get MODG out of Topgolf Callaway Brands?
I can't put it together.
It stands for modern golf, Tony. MODG, modern golf. But they will not be Topgolf Callaway for much longer, as we will see. I picked this for you, Tony, because Tony's a mad golfer. He'd much rather be playing golf right now than talking to me. And I think as soon as we get off of this, he's going to go play golf. Is that right?
No, we're going to go and watch a horse run today at Mornington.
Oh,
yeah, which is
race season. That's right.
Yeah.
Then you'll go play golf.
We did play golf yesterday.
Right.
And I do live on a golf course.
Tony lives on a golf course, and yes, that's his favourite pastime. So, according to Topgolf Callaway's website, Tony, you like this, 545 million rounds of golf in the US were played in 2024. It's a new high for annual rounds. 28% are on-course golfers. 28% of on-course golfers are women, another record high for 2024. Over 3 million beginners have taken up the on-course game in each of the past 5 years. So golf is booming.
Came through COVID very strongly, at least in Australia, because people were allowed to go out into golf courses for exercise during COVID, and they couldn't do, contact sports or soccer or whatever else they were playing normally, but they could play golf, kung fu, yeah. So it boomed. It went through prior to COVID, golf was on its knees, and golf courses and clubs were either shutting or merging or being sold off for land development, for housing, that kind of thing, yeah. Or a combination of all of the above. And then COVID just revitalized it. I guess it's also part of the work from home trend. Like I remember even after COVID, I'd be out playing on the golf course and I'd be paired with someone who'd be on their phone saying, yeah, boss, yeah, I'll look into it. And so they're pretending to be at the office, but they're really on the golf course as well.
Nice. What else have I got here? Stats-wise, yes. Trends of golf are emerging in fashion, lifestyles, travel, art, music, and more, according to their website. 2/3 of today's on-course beginners have some kind of off-course experience, which leads us into the Topgolf conversation. So just what do they do for people like me who don't know anything about golf, really, except it's a ball and a stick and looks really, really boring? If you can't get your nose broken, well, I don't see the point. But anyway, Topgolf, they own Topgolf. I have been to a couple of Topgolf venues. Been to the one down at the Gold Coast once or twice. And then the last time I was in Arizona a few years ago, Chrissy's brother-in-law, his family own a real estate development company, and there's a Topgolf on some of their land. So he has like VIP access to a Topgolf in Phoenix, one of the suburbs of Phoenix. So we went there and played, and it was a lot of fun. We had a great time. And the Top Tracer stuff, which is also part of Topgolf Callaway, is part of that. So they have Topgolf. So for people who don't know anything about golf, it's like a high-end, fancy restaurant, bar / driving range.
Yeah.
Is that a fair description of
and
it?
they've gamified it so the balls have little RFIDs in them that can be tracked, and you hit targets that light up and get points, and it all relays back to a screen to show you what your score is. Yeah.
And it's fun for people who know nothing about golf. You can go and you can have a great time, great night out. They'll bring food to you, beer, and
Yeah, and then people fall off the top floor into the net.
People standing on top platforms, swinging metal sticks and hitting hard balls with beers.
Yeah.
What could possibly go wrong with that? And the Top Tracer stuff is the ball tracing element of that. So you have a little screen and it shows you how far your ball went and how fast it went and all that kind of stuff. So it's good.
And that Top Tracer technology has certainly revolutionized professional golf because, golfers will have a TrackMan beside them on the range. Professional golfers will have a TrackMan beside them on the range, and they'll be working on dialing in the exact distances for each club and, compression speeds and all that kind of stuff. So it's really taken golf's physics to a new level.
And I understand the Top Tracer stuff came from TV golf.
Yes.
They would have like overlays and,
Correct.
And you should put this in. They went, we should.
Well, for a long time, you'd watch golf on TV and you'd see the guy swing and the camera would pan to the sky and then come down and try and find the ball in the fairway. And that was how they cover it.
Yeah. I'd never be able to see anything.
Yeah.
It's just, it's gone. It's my problem with playing golf in real life. I can't see anything anyway. And then they have the Callaway golf equipment, clubs, balls, putters, and active lifestyle apparel gear. Travis Matthew, OGIO, and until recently, Jack Wolfskin. But as we'll see, they sold that off just recently. So the venues are the crowd pleasers. The sticks and shirts keep the golf nerds happy. It was founded, and this is a great story. Do you know the story of Callaway Golf?
I don't.
Oh, you're gonna love this. It's a great story. So, founded by a guy called Eli Callaway Jr. He was the president of the textiles division of a company called Burlington Industries. They were a huge American fabric maker, Berkshire Hathaway-esque.
Yeah.
Founded in 1923, went out of business, got sold off in 2003. But he retired in 1973 and bought a vineyard in California. I think he ended up owning several vineyards that he sort of ran those for 10 years. And he was an avid golfer. No, but he was an avid golfer because, fun fact, his cousin was a guy called Bobby Jones.
Oh, wow. Famous golfer.
Creator of the US Masters tournament and co-founder of Augusta National.
Mm-hmm.
And apparently he offered Callaway a free membership of Augusta National and Callaway turned it down.
Wow. Big mistake.
Because they're only open for like 6 months of the year or something. And he said he'd be spending that entire time with friends ringing him up, begging him to get him a game. And he was like, I don't want to buy into that. But he learned to play golf by watching Bobby Jones, who was like an amateur champion, I believe.
Yep.
And he made a series of films about how to play golf.
The 5 principles.
And Callaway learned how to play golf by watching his cousin's films.
Yeah, right.
Anyway, so he was an avid golfer and he was playing golf and he was in a pro shop one day, picked up a wedge, started swinging it, liked it, and went to visit the guys that made it. There was a company called Hickory Stick. You ever heard of a hickory stick?
Well, that's how golf clubs used to be made. Back in the days when that first started, they had hickory shafts, which is timber.
Well, these these guys put a steel rod through the hickory shaft.
Okay.
And so he went and just,
Mhm.
did a buffet. I was like, oh, that's cool. I'll go talk to these guys and see what they're doing. And then at some point after that, 1982, they were running low on money and he sold his vineyards and bought half of their company. It was renamed to Callaway Hickory Stick USA. And then in 1983, he became the company's president. They moved their headquarters to Carlsbad, California, where he could be found selling clubs out of his Cadillac. And then in 1984, he bought the rest of the company for another $400,000, and it changed its name in 1988 to Callaway.
So he was Callaway selling clubs out of a Cadillac in Carlsbad, California.
Yes. Somebody should write a song about that. But I thought you'd love it because,
It's a great story.
he retired, just started running vineyards and then sold that and bought a golf company. Like, what a dream.
Yeah.
Dream life, right?
And
he was in his 60s when he
Right.
did it too. Like, he sold everything and then sunk it all into this golf stick company.
Well, you might cover it in your story. And Callaway was known for its wedges at the start. And then they were known for the first metal drivers, the Big Berthas. So he's very much into the technology of golf.
So in 1986, he hired a cue designer, Richard Helmstetter, as a consultant, golf cue designer.
Golf
I
cue?
guess.
No, you mean a billiard cue?
Yeah, sorry, billiard cue, the other
Right.
stick
Yeah.
sport, a billiard cue, yes. Billiard cue designer, Richard Helmstetter. Helmstetter was named chief club designer and introduced computer-controlled manufacturing machines. And then along with a guy called Glenn Schmidt, who was the company's master tool maker, they developed the original Big Bertha
Yeah,
steel club head.
Yeah.
Arnold Palmer once said that the Big Bertha was one of the most important things that ever happened in the game. The whole idea was to give average golfers an opportunity to enjoy the game a little more.
And if you, like, to the non-golfers out there, and I've played golf prior to Big Bertha's coming in and after Big Bertha's coming in, and certainly I hadn't heard of Callaway prior to that. We used to play with persimmon wooden drivers. So they were made of wood and they would have, I guess it was a plasticky type insert in the face and screws. And so if you hit a good drive, it was said to be hit out of the screws because you sort of your sweet spot on a persimmon driver. And persimmon drivers they were about the size of a 7 wood, for golfers out there listening. So they're much smaller than what drivers are today. And they had a very small sweet spot on them, which was a plastic insert screwed into the face of a wooden driver. And, sometimes you'd play a shot and the plastic insert would go flying, and sometimes their head would come off. And they were very hard to hit long and straight, and they were prone to failure as well. And then one day you'd be on the course and the guy standing next to you would have this huge thing. And the rules of golf tell you how big a driver can be. And Callaway kind of pushed the rules because the way they tested, or the way the rules are worded are, I think it's 460 cc's of water can be displaced by the head of a driver. So you dunk the head of a driver in the water and see how much so, up until then, the driver was small. It would get dunked in the water, it would pass it easily. So then Callaway said, well, what if I displace the water by having a big hollow driver? And so, they're probably four times the size of the old drivers. They still obeyed the rules, and displaced the 466 cc's or whatever the number is, but they did it by being big and hollow. And then they kind of said, well, how do I make a big hollow golf club that doesn't break and works properly? And they came up with the metal. And so you'd be standing on a tee, and the guy beside you would have this, I don't know how you describe it, like a boot on the end of his club. And the ball would go for miles, and it'd be so easy to hit because you had a huge sweet spot because the thing was big. It had a much bigger sweet spot on the front of the club. And they just took over. From then on, everything was metal and large.
So, yes, in 1996, the company hired Roger Cleveland as chief club designer. And then in 2002, launched the Callaway Golf Forged Wedges, constructed from carbon steel with modified U-grooved faces. In 1996, they announced the development of a new golf ball under the leadership of a guy called Chuck Yash, the former head of TaylorMade Golf. Callaway Golf Company engineers recruited from DuPont and Boeing used aerodynamic computer programs first used by Boeing and General Electric to evaluate more than 300 dimple patterns and more than 1,000 variations of ball cores, boundary layers, and cover materials to create the new Rule 35 ball. They settled on only 2 versions of the Rule 35 ball, choosing to develop a complete performance ball rather than separate balls developed for spin, control, distance, and durability. Eli Callaway said that their objectives were, we have combined all of the performance benefits into one ball so players no longer need to sacrifice control for distance or feel or durability. Each Rule 35 ball contains a unique synergy of distance, control, spin, feel, and durability characteristics. This eliminates confusion and guesswork in trying to identify the golf ball that is right for each individual golfer.
So he was good at marketing as well, because there's certainly been a big upgrade in balls, and that's about to get rolled back. The big rollbacks happening in golf to stop the pros from hitting it too far. So golf balls are actually being de-scoped in technology. I think it's starting next year. Big debate in the golf community. I think it only applies to professionals. Amateurs like myself can still use top of the range balls. But yeah, certainly in the past, you would buy a ball to hit it straight or to, make sure you didn't scuff it to be more durable or to stop side spin or to give you side spin. So you buy a long ball or a spinning ball or whatever. And then I always thought it was the Titleist Pro V1 came along and combined all those things, but it could have been the Callaway that came along first. But, as things have gone on, both Titleist and Callaway still have soft balls, hard balls, professional balls, low spin balls, high spin balls, all that kind of stuff. So marketing takes over at some point.
Well, do you know why the ball was called a Rule 35 ball?
I don't know.
Neither do I. I didn't look that up. I'm just looking it up now. Probably a good reason. Anyway, so he resigned as CEO and president in 1996, remained as chairman of the board, died in 2001, aged 82. And he has a memoir that was published posthumously, The Unconquerable Game, My Life in Golf and Business.
Oh, I should get that.
You ever read that?
No, I should get it.
No, probably not. No, should send it to you as a birthday present.
Thank you.
So there you go. That's a bit of the background on Callaway.
Mm-hmm.
They went public on the New York Stock Exchange in 1992. And then a couple of big pivots. So in 2020, October 2020, they announced they would acquire Topgolf for $2 billion. It happened in 2021, I think, that went through. So a COVID era thing.
Yeah, definitely. Topgolf took off. Mm-hmm.
2022, they rebranded as Topgolf Callaway Brands, and that's when its ticker symbol changed from ELY for Eli to MODG. And then they just announced in recent times that, they sold off the German clothing company, Jack Wolfskin, outdoor clothing company, because it wasn't really working for them, I think. But they have announced recently that they're going to separate into 2 companies. There's going to be Topgolf and everything else, Callaway, Top Tracer, and apparel. To unlock value is the rationale for it.
I don't know if you're going to cover it, but it never went well, that merger. The share price tanked, and it's been in the doldrums ever since, really.
Yeah. And as we'll see when we get into the numbers, they've had a lot of write-downs of their valuation because of that too.
I did find an article in the Wall Street Journal about that from a year ago. And its headline was, Topgolf sent Callaway into the rough. And you've covered off a lot of the issues, but there is a graph in the article which starts from, baseline is 2021, and the share price for Topgolf Callaway has gone down 50%, and the share price for Callaway's major competitor, Acushnet, is up 75%. And that's largely because people thought the Topgolf, or analysts thought the Topgolf acquisition wasn't a good one. And it sounds like Callaway have come to that same conclusion now too, if they're going to spin it off.
Yeah, in mid 2021, the share price was up around about 37, 38 bucks. It's trading at about 10
Sure.
now. So it's been a rough ride share price wise.
I did know too,
But
I don't know if it's germane, it might be just a small fish, but I know they had to build a new golf ball manufacturing plant or a big plant upgrade because a large part of their business is also selling golf balls, and that's kind of the bread and butter because people like me lose them a lot. So we're always restocking golf balls, right? So, and Callaway golf, I like Callaway golf balls. They're good balls. There's one of their golf balls is called the ERC, Cam. I'll tell you a story. It's got a red line, a blue line, and a black line down the middle of it, so you can line up where you hit it and where you putt it. And it was taken from aircraft carrier technology, where they'd have 3 lines on the aircraft carrier for the pilot to line up where the hook gets caught. And apparently that stops any sort of, if you have one line, you can have optical illusions and deviations as you're moving around. So they adopted that onto the golf ball as well. It hasn't made much difference to my game, but again, it's good marketing. But anyway, they had to make a new plant. They put $55 million US from memory into a plant last year or the year before because they had quality issues in their golf balls.
Right. Nothing worse than having quality issues with your balls, Tony. I've always said that.
It's an interesting, it's true, but it's an interesting thing because if you play so there's been a rise of sort of YouTube influencers in golf, and one of them is called My Golf Spy, and they would really take apart golf ball manufacturers and I guess clubs too, but particularly balls, and put them through rigorous testing. One of the tests they did was to say, we'll take a dozen golf balls and see if each one measures up to the specs. And what they found with Callaway for a while there is that like not every ball was measuring up to the specs. And if you think about it, if you're playing golf and you pull out half a dozen balls and one's rolls a bit more to the side than the other ones, you think it's you. You think it's, I'm having a bad day, but really it's the golf ball. So Callaway had to address that concern by upgrading their plant.
It's not you, it's your ball. Their revenue mix is, so Topgolf was about 41% of their revenue. This is FY23 numbers, so a little bit old, but I think it's basically the same today. Golf equipment, 32%. So that 41% is about 1.76 billion. Golf equipment, 32%, 1.39 billion. And active lifestyle, 26%, 1.14 billion. So
I think
about
from memory, Callaway owned the FootJoy brand, which is a big producer of golf shoes and apparel for golfers.
Oh, FootJoy. That didn't come up in my list.
I'm pretty sure it's Callaway.
Possible though. So looking at their financials in Stockopedia, they've been losing money the last year or so, but we'll get into the whys and wherefores on that in a minute. Total revenue CAGR is up about 20% over the last 5 years. 2019 total revenue was about 1.7 billion, 2020 1.6. 2021 with the Topgolf acquisition jumped to 3.1, 2022 just under 4, 2023 4.3, and trailing 12 months is about 4.1, and 2026 estimate comes in a little bit under 4, so it's coming back off a little bit. But again, I think this is partly due to the potential spin-off of getting rid of the Jack Wolfskin and maybe the spin-off of Topgolf. But their operating profit has gone from 133 million in 2019 to 257 in 22, 238 in 23, to a loss of 1.275 billion in 2024. But when you break that down, most of it is non-cash impairment charge of 1.452 billion, related to goodwill and intangible assets in the Topgolf segment. Without that impairment, the underlying business non-GAAP measures for 2024 full year was about profit of 256 million. So if you take out the impairment, it's still profitable, doing okay.
Mm-hmm. Sorry, can I just interrupt there? I've just, Google's just told me that no, FootJoy is actually owned by Acushnet, the competitor to Callaway. So I should have Googled it first.
Apologies to the fine people at FootJoy for that confusion. So the golf equipment, the clubs and the balls, throws off steadier cash than the venues. It's a good part of the business. You have your dyed-in-the-wool golf people like yourself that are always buying clubs and balls and the whatnots. Top Tracer is the toll road. It's sort of high margin licensing and installs into third-party ranges. They're generating some good cash out of that. The Topgolf is the consumer funnel. One of the interesting things about that is it supposedly introduces new people to golf. You go along for a party and you pick up a golf stick for the first time. I think that's a technical term. And you go, oh, this is fun. And then you end up becoming a mad golfer. So that has been part of that's the theory. That's been the strategy. But and it may continue to be as they spin it off. How they're going to spin it off is uncertain yet, whether it's they sell it, they float it, they whatever. I think they intend to keep some of it. I'll get into that in a second.
I think I was just looking up an old article in the Wall Street Journal too. I think Callaway have been an investor in Topgolf right from the start. So,
oh, really?
Yeah, I think in whenever it was 2021 or 2022, they upped their position to be a full takeover, but they've always had some involvement in it.
Right. So one of the reasons why it is cheap at the moment is the venues are cyclical and traffic sensitive and capital hungry. Costs a lot of money to build these things. Once you build it, you've got your staffing costs and all of your regular costs for running it. So if times are tough and people stop going to play whatever it is, how would you like fun, family golf, nights out, whatever?
Outings, yeah.
You know, it's like running a restaurant and a bar and all those sorts of things. You've got a fairly solid overhead. And things are a little bit tough, as we said earlier on, in the United States at the moment. And it's probably going to get tougher moving forwards, the way things are going over there for large segments of the population. So they're better people just going to play not serious golf. I'm trying to think of what you would call that, like
social golf,
entertainment golf, social golf. I guess, yeah. Might be a little bit flimsy. Same venue sales have been wobbling and venue build slowdowns have been spooking investors. Then you've got tariffs, wage inflation, and just the complexity of mixing restaurants and sports and retail. And as you said, that they haven't really pulled off the acquisition merger very well. And the tariffs are costing them a surprising amount of money. For the full year 2025, management is now estimating tariffs are going to cost them around $40 million.
Okay. Is that because they import things from China or Asia?
Yeah. They've imported goods, equipment, apparel, accessories. It's all manufactured. I don't know if it's all in China, but I'm sure a big chunk of it is in China. It could be Vietnam, could be different places, India, all getting hit by tariffs. South America too. They get stuff, I think, made in Mexico. So your margins are getting squeezed unless you can pass those costs on or save elsewhere. I think they have announced they're going to do some layoffs to try and save some money. But with this split up, what they're proposing is two independent companies, Callaway, golf equipment and active lifestyle, Topgolf, venue-based golf entertainment, probably a spin-off of Topgolf to existing shareholders of MODG.
Right.
But there could be other options as well. Could be a sale, a combination, retained stake. Not exactly sure yet what that's going to look like. So they just came out on November 7th. We're recording this on November 10th. November 7th, they just came out with their Q3 numbers, and they were actually pretty good. Topgolf Callaway Q3 revenue growth 3% year on year, which doesn't sound like a lot, but that beat analysts' expectations. Their adjusted EBITDA for Q3 beat the consensus, driven by golf equipment and Topgolf segments. Company raises full year 2025 revenue and adjusted EBITDA guidance. Company raises full year revenue guidance to 3.9 to 3.94 billion. Topgolf revenue guidance increased to 1.77 to 1.79 billion. And full year adjusted EBITDA guidance increased to 490 to 510 million. Golf equipment demand showed strong demand for golf equipment, drove revenue growth in the golf equipment segment. Topgolf venue expansion, addition of 6 new Topgolf venues and improved traffic trends led to revenue growth. But then there was the tariff impact as well. So good numbers. Everyone seems to be happy with it.
So why are they demerging then?
Well, oh yeah, I mean, it's good, but it could be better,
Okay.
I think, if they split it up and focus is the theory. Unlocking value, Tony. Got to unlock value.
Gotta love management consultants. I guess they were involved somewhere. We're going to get synergies when we
Gotta make
combine these
fees.
two businesses together because
Yes.
they both got golf in
Yeah.
their name, right? They're both,
Yeah. I kind of get it, you know.
and now we're going to unlock value by splitting them out again. Yeah.
Yeah. And then they'll have to buy them again, Tony. You're going to buy
Right.
it, let it go, buy it, let it go. It's like outsourcing, insourcing. So, look, I'll
Well,
just...
no, they're going to merge with an AI company next, I think, Cam.
Oh, AI golf.
Yeah,
Perfect.
AI golf.
I love it.
Pro Tracers.
I might be able to play golf if I can get the robot to do it for me. Why it's on the checklist, Tony. So it's got a QAV score of 0.10, quite low, but
Ooh.
I went down and picked it just for you.
Thank you. I've really enjoyed this.
I was like, oh, I got to talk about this one. That's crazy, you know. Average daily trade's about 25 million. Price to operating cash flow is 6.26. Pretty high by our standards. It's below our cutoff, but that's pretty high. We have a cutoff of 7, so it's getting up there. So if you want to get in on this, this is your opportunity. Quality rank is only 40 in Stockopedia. We don't score it unless it's 60 or better. So we didn't score it for that. Stock rank is 85. We don't score it unless it's at least 90. The F score is 5. We score anything that's over 4.5. So that's its financial trend is reasonable. It's not great, but reasonable.
Yep.
It didn't score for IV1 or no, it did score for IV2. Didn't score for IV1. Shouldn't have scored for IV2 either. What have I got? That's wrong. Didn't score for either of those because it's got a negative EPS.
Oh, right.
And a negative future EPS.
Oh, right. Yeah, I was going to say maybe the forecast is for a positive EPS.
No, but the last reported EPS was -8, and the forecast for next year is -0.374. So it's improving a lot once they get rid of some of this. Again, I said like a lot of it was this impairment charge. So, but still not getting it into a positive territory next year.
So if I start using Callaway golf balls exclusively and get my mates to do the same, because we lose golf balls, we might be able to boost that EPS back into positive territory. Buy the stock now.
Yeah, you should. Yeah.
And then start using
and then buy golf balls. Yeah. Let me know how that goes.
I think the Wall Street Journal will be saying into the rough.
Did score for price less than book. Book price is 13.5. The price is 10.6. So the price is less than book. It also scored for price is less than book plus 30. And
And I just should highlight to anyone listening who's doing their own calculations, it could possibly be that the price to net tangible assets is different to the ratio to price to book, because if they've had write-downs, it's probably because they were carrying goodwill on their balance sheet. I haven't done the analysis to do that, but people can check that, which doesn't usually worry me. But obviously they take a non-cash write-down, as an impairment if they carry assets that are with lots of goodwill in them and it hasn't worked out.
Book value has gone from 767 million in 2019 up to 2.4 billion in 2024. but that's down from 3.9 billion in 2023. There was a big spike there that was part of the Topgolf merger in a couple of years, but then it looks like that's been re-estimated.
Well, that's where
My
the
assumption is
cash write-down, non-cash write-down's been taken,
the
I guess.
impairment.
Yeah, the impairment.
Yeah.
Mm.
I think the auditors decided those assets were no longer worth what they thought they were worth a few years ago. So bottom line is interesting business, doing okay, generating a lot of cash, had that write down. But outside of that, if you factor that out, still generating a lot of cash, seem to be doing a lot of good work to offload things that aren't working. They seem to be quite nimble in terms of moving things around, are being affected by the tariffs, are being affected in some shape, particularly the Topgolf thing with the slowing down of the certain parts of the US economy. But as you said, as soon as they rebrand it as Topgolf AI, it'll probably be worth trillions.
Yeah.
Current CEO will get $1 trillion pay package like Elon.
You can just see a fat cat with a cigar sitting in a booth at Topgolf saying, "Hey, my AI robot's better at your AI robot." Topgolf.
Yeah. Maybe that'll be the next thing.
I bet my robot against your robot, boy.
They should be just selling golf robots that'll go out and play it for you. You can just knock it out of your golf cart, let your robot go and hit the ball on your behalf.
Well, there is a golf robot. It's been around for a while called Iron Mike. They test golf clubs with it. It's like a big swinging arm, but
right.
Yeah, the golf. I think
you can't take it out on the course with you though.
No, you can't. Take it to the driving range. It's in the driving range.
You got a robot golf caddy for your 60th birthday, didn't you? A couple of years ago. Did. You use that much?
I do. It's clocked up over 500 kilometers on the course now.
Wow, that's great. Well, when I start my robot company, you'll be my first customer to buy a golf robot. I'm going to come and sell you a golf robot that'll carry your bag for you, carry your clubs, and then hit the ball for you as well. And then go get the ball.
I just wanted to say, that's a great shot, Tony. Well done. Get a little golf clap behind.
Just glazing you, yeah. Just to sit there and go, "Oh, Tony, you are such a great golfer."
And it can carry my clubs, tee it up for me.
Well, that's my pick of the week, Tony.
Thank you. That was fun.
MODG, Modigliani, the golf company. And with that,
very good.
I'll let you go to the horse races.
Thank you.
You got a horse running today?
Cha-Cha Changes. Horse I named. Yes. Racing at Mornington, which is closer to where we live than most racetracks. So, yeah. And Ruddy's down with me this week, so we'll jump in the car and go up there and have a bit of fun.
Well, good luck. I hope your horse runs well and has a win.
Yes. Do you think there'll be robot horses or jockeys at some stage soon?
Absolutely.
Yeah.
Yeah. No, it's a bit like Magnus Carlsen says about chess. Like, we have chess software that can play better than any grandmaster, but no one watches chess computers play against chess computers. There's no fun in that.
Yeah. Yeah. There's the thrill of the animal and the jockeys taking risks and all that kind of thing too.
Maybe when AI takes all of the white-collar jobs, we'll all have to become jockeys.
Oh, by the way, the poor horse that I have to ride. Well, there has been attempts to computerize horse racing. For a while, TAB's had a thing called Trackside in there. TAB's are betting outlets in Australia, and they have a thing called Trackside, which was a kiosk with a horse race AI simulation, very high-quality graphics, and I guess some kind of randomized result, but you could bet on it, place a bet, and then, a bit like roulette, I suppose. The way that TABs work in Australia is everyone pulls their bets and the winner takes a percentage less a commission. So TAB didn't really care which horse won. But, it faded and died. Didn't have the glamour of going to the track.
So last week in Australia, we had the major horse racing event of the year, the Melbourne Cup, and you had given me your tips for it the day before. How did they go?
One of the tips got up. It won.
Won?
Yeah, so I gave 4 tips, and one of them won.
Was it your first, your primary tip?
My primary tip didn't win. I think it came about 12th, I think. Yeah.
Right, okay.
Yeah. But my second tip did, and that was good.
Your second tip won? Oh, well done.
Yeah, thank
Did you
you.
have money on it?
I did. I won money on it. And I think the odds were about $8.50, so it makes up for the last 6 years of dud tips in the Melbourne Cup.
Oh, well done.
Yeah.
Congratulations. Okay. Thank you, TK.
All right.
Have a good week.
Thanks. Bye. That was fun. Thank you.